Hello everyone, I hope you guys are having a wonderful day. I'm Arif, your financial freedom journey partner. In today's video, I'm going to talk about top 5 Canadian stocks that I'm planning to buy more in 2025. I already hold this particular 5 stocks and I believe in near future this stock will go up to the moon. So I'm planning to buy more and more. At the beginning of today's video, I will show you my current stock portfolio, which is around like $171,000 in value, and it took me 2.5 years to accumulate this number. So from there, I'll show you my top 5 Canadian stocks that I'm holding and how much money it has generated so far, and my strategy, like how I'm gonna add more of these 5 Canadian stocks. Also, at the very end of today's video, I'll share with you some tips like that gonna help you to start your investment journey. So without further delay, let's start to explore the top 5 Canadian stocks that I am planning to buy more and more in 2025. So I have logged into my Wealthsimple account. I'm in Canada, and in Canada, Wealthsimple is pretty popular. It's very easy to get started with. So if you are a new investor or planning to explore the investment world, then I would highly suggest you to start with Wealthsimple. So at the very top of this account, you can see my current stock portfolio value, which is $171,736, and the return is 66.54%, which is $68,698. So now a question could be arise, like how long it took for me to get reach this point. Well, I started my investment journey, like if I go all the way back in here, in May 18, 2022, and slowly my portfolio has grown, and now it's like $171,000. So it took me like 2.5 years basically. So here I do have few subsections, like I do have TFSA. TFSA stands for tax-free savings account. So if you are in Canada, then you will have this advantage to use the TFSA, where you can grow your money. So basically the return that it's gonna generate under the TFSA, it's tax-free. So you can accumulate more and more of wealth using the TFSA. So my suggestion to you is that first max out your TFSA. Once your TFSA is all maxed out, then you can go for some other options like non-registered account, what we can also call the personal account, or RRSP. So my TFSA current current value is $76,723, and it has gone up by 77%, and my personal account, it has gone up by 39.99%. So that's a quick update. So now let's start with the stocks that I want to cover today, the top 5 Canadian stock that I'm planning to buy more and more in 2025. All right, let's start with the first stock that I'm planning to buy more in 2025, the Canadian stock. The name of the stock is the EIT.UN. So the full name is Canoi EIT Income Fund. This is more of an income fund. So if we want to see the 5 years return, in 5 years, it has grown by 50%, which is impressive, steady and slow growth. And the most attractive part of this particular EIT is the yield or dividend, which is massive 7.76%. So here you are getting a nice growth and also a very nice and attractive yield or dividend. Now let's try to explore a little bit more about this EIT. So I have opened the official Canoi Financial website. So here we're gonna see some numbers. So here is a summary. Like in 1998, if you invested $10,000 of money under this EIT stock, by 2024 you would have near around like $140,000. So all you need to do, you need to put your money on this, and you need to just forget about it. And the back end, it's gonna grow like crazy, because every year you are getting this nice dividend that you will reinvest under this EIT, and with the compound effect, it's gonna grow really really fast. You can't believe you can't imagine like what's the power of compound growth. It's gonna explode in few years. Like once you start do your initial investment, and if you keep it and don't touch the initial investment, after 10 years, 15 years, you will be just shocked the number you're gonna see. All right, now let's try to understand the top 25 equity holdings, like which particular stocks is holding. So here we can see some big names like Visa, the American Express, the Canadian National Railway, Royal Bank of Canada. So these are all blue chip stocks, so it's pretty safe in that way. And the sector breakdown here, it's heavily invested under the financial sector, the energy industry, technology. So it is a well diversified portfolio. So if you want to have a steady income, like the nice dividend and with some steady growth, then Canoi EIT is an excellent choice. So if I go back to my portfolio right now, so right now I am holding 430 shares of EIT under my TFSA, and so far it's up by 13.97%. And one cool thing I want to show in here is the dividends that I'm getting every month. So here you can see in December I got dividend like $35. That's in November I got $35. So every month I'm getting the dividends, and what I'm doing with the dividends is that I'm reinvesting the dividends into the EIT so that it can grow a compound basis. So once I get a dividend, I'm reinvesting it. So my goal is for the long term. When imagine I have like thousands of shares of this, so every month I'm gonna get a very good number of dividends, and then I will reinvest it, and it's gonna grow automatically. So that's the power of investment. All the things that are happening in the back end passively. Now let's explore the second stock, the Canadian stock that I'm planning to buy more. The ticker is DOL, which stands for Dollarama. So this is also an excellent growth stock. Basically, I bought it for the growth potentiality. So in 5 years, if we see the performance, it has grown by 200%. So this is massive growth. So that means, what does it mean? That means like if you have invested $10,000 5 years ago under Dollarama, after 5 years, your $10,000 would be $30,000 in value. So it's very very impressive, like 200% return in 5 years. That's impressive. So currently I am holding 47 shares of Dollarama, which is the total value is like $6,665, and it has grown by 20%, and it has made me like $1,143 so far. So I'm planning to buy more and more of this share, because here in Canada, Dollarama is pretty popular. Whenever you visit any of the Dollarama store, you're gonna see a very big line. What does it mean? That it is doing good business, and the company which is doing a good business, that means their share value gonna up and up, and you can easily find this sort of shares easily, like where you live. If you find something that is pretty popular and people are using it, people are purchasing the products from the particular companies, then you can believe the potentiality of this particular share, and you can invest your money to grow. So let's see some other numbers. So the market cap is $39.37 billion, which is really good. And the P ratio, even though it's a very good growth stock, the P ratio is 36.02, which is really attractive compared to some other growth stock, where when it's a growth stock, the P ratio is definitely higher, but for this it's still pretty nice. That is like below 40%. And And here the 52 weeks high is 152. So right now it's 141. So that means we're getting a nice discount. So I believe in Dollarama. I'm gonna buy more because definitely it has made money for me, and I do believe that in future the share price of Dollarama will go and up. The third third stock that I'm gonna buy more in 2025 is Shopify. The ticker symbol is SHOP. So this is an excellent growth stock in Canada. So Shopify is pretty popular as an e-commerce platform. The growth potentiality of this share is absolutely awesome. So if we want to see the numbers, like in 5 years, it has grown by 161%. So it's really nice. Currently, I hold near around like 35 shares of Shopify, and here you can see it has grown quite a bit for me here. Under my TFS, it has grown by 195%, and under my non-registered personal account, it has grown by more than like 200%. And it's doing awesome. It's generating a good amount of money for me, and as it's more of a growth stock, I am pretty confident like the price of the share will go up in future. So that's why I'm buying more and more. The market cap is $199 billion, which is awesome. Even though the P ratio is a little bit higher in number, like 106. But guess what? If it's a growth stock, more people want to buy these particular shares because the earning potentiality. So still, I feel like it's safe to buy some Shopify shares. The fourth Canadian stock that I am planning to buy more in 2025 is Manulife Financial. The ticker symbol is MFC. So this share is doing really great. The reason I am interested to buy more of this Manulife Financial Corporation, so it's not just only operating in Canada, in North America, it has also expanded to provide service to Asia too. So that means with the growth comes more earning potentiality. So that's why I think like this is the perfect time to buy more of Manulife Financial shares. So in 5 years, it has grown by 65%. It is more of like a steady growth basis stock, and it also comes with a very nice yield, which is 3.65. So you're getting the growth potential and also some nice dividend. So currently I am holding near around 56 shares of Manulife Financial Corporation, and I have already generated some very good returns. So so far I have got like 87% return from it. So I am planning to buy more in 2025 with the expansion of its services to Asia. So I feel like this share gonna go up in a very near future. So the market cap is really good. That is $76 billion. So with this massive market cap, the share is can be considered as a blue chip share. The P ratio here is very, very nice. Its P ratio is 15.41. So a good question could be like, what is a PE ratio? Like the earning potential comparing with the pricing. So when the P ratio is less, the lesser the P ratio, that means you are getting the value out of your investment or money. So you're not overpaying for it. Even though it's growing stock, the P ratio is very attractive, which is below 20. So that's why I feel like this is an excellent time to invest your hard-earned money under this Manulife shares. So the yield or dividend is 3.65%. So here you can see I am also getting some good dividends here. And I'm reinvesting it because I really believe in this Manulife Financial Corporation stock. The fifth Canadian stock that I'm planning to buy more in 2025 is TD. TD stands for the Toronto Dominion Bank. In Canada, TD is pretty popular. It is a huge user base, and it has also some footprint in US market too. I think this is a good time to enter into this TD share, because right now, if you see in 5 years, it has grown by 11%. It's struggling a little bit right now, but guess what? For retail investor like us, it's a perfect time for us to get in, because we will get a very nice discount now. So here, if we see the 52 weeks high, it was 87 and low is 73. So right now we'll get some discount. So I think it's a good time to purchase some TD shares. Right now I'm holding around like 22 shares of TD ticker symbol, and the good part about TD share is that the nice yield or dividend. So here we're getting 5% dividend. So if you really want to have some STD income, some cash flow, TD is definitely for you. Here you'll get the dividend, which can help you to grow your account, or you want to have some dividend to pay your monthly expenses, then again you can use this TD share. So the market cap is $153 billion, which is massive. The PE ratio right now, see, it's quite good. That is 17.40. So it's less than 20. So it's really nice. So I'm planning to buy more, because now I feel like we are getting some discount. So when I started to purchase the TD share, it was a little bit higher. It was near around like I started, let's see some numbers in here. So when I started, it was higher, like 87, like near around $90, but now it's 82. So that means it's quite cheaper compared to before. And with these discounted prices, I think retail investor like us should try to purchase few more share of TD. Congratulations guys for reaching this far of today's video. Today I have discussed about top 5 Canadian stocks that I'm planning to buy more in 2025. I have showed my current stock portfolio update, the growth that I already had with these 5 particular stocks, and the reason why I have planned to buy more of these 5 Canadian stocks. So let's talk about the strategy, like how I am planning to buy more, like when at like what stage I'm going to follow. Well, I have created a watch list under my stock portfolio, under my account, where I am monitoring these 5 shares every morning. So I am trying to find out the perfect timing, like when I see some discount, then I will get in and purchase more, because at the end of the day, the major question that you need to answer is the fundamental is strong of this particular company? Do I understand the business? Do I know the numbers of this particular shares? If I am pretty confident like this, yes, this is an excellent business, it has the potential to go up, and the numbers all are adding up, so why not we get the share in a discounted prices? Like that means like the fundamental is strong, just maybe it's struggling for a little bit, like for a smaller time frame, but this is an opportunity for us to get in. The portfolio that I've shown you, it took me like 2.5 years to build. At the very beginning, I was not quite sure like how to do it, because it's our hard-earned money that we're investing. So we need to be very serious. So first, we need to educate ourselves. We'll need to understand the ins and out and everything. Once we are pretty confident, then we can start investing. If we don't invest our money and just put under our bank account, then our money gonna lose value for the inflation, because the inflation rate is quite high. If you guys have any question in doubt related to the Canadian stocks, let me know in this comment section, and I'm going to reply you in a very short bit of time. Thank you so much guys for watching my videos. It means a lot to me. If you found this video helpful, please like and subscribe to my channel so that you can see my upcoming contents. Well, that's all for today. Have a great and wonderful day.